So obviously we're a little further along in the Harvey response. We've had people there for 3 weeks. And we have a pretty good estimate on the damages for farmers. We think Harvey will be about a $500 million gross event for farmers. After our reinsurance plans, after tax, about a $140 million hit. So that it'll be a reasonable sized hurricane for us. And certainly the more important thing is the devastation that it's caused the citizens and clearly uninsured loss that will be around for Harvey as well.
How long does it take both to assess the damage? I imagine there'll be continued assessments. And then how long does it take to actually get money into the hands of those who've been affected?
So on the assessment, we think we've had 40,000 claims reported from Harvey. And given the flooding event nature, an awful lot of this has been auto insurance and not homeowners. We think by the end of this month, we'll have seen every single person who's had a claim with us and have been able to assess that damage. We literally, after the assessment, we can issue those checks to those customers very quickly. And so that process has already happened, and we have about a quarter of the claims that have been reported to us are already closed. Right. But we do think we'll have extra people on the ground in the Houston area for the remainder of the year as homeowners repairs start getting going. There's a lot of times you need to bring the adjuster back in to make sure the progress is happening on the house. You know,
just when we think we've gotten past Irma and Harvey, we're now facing Maria. What are your forecasters telling you?
So we have a command center that watches all of these things in our national headquarters out in Kansas City. And so far, the models will tell you for Jose, Maria, and Lee, certainly the Caribbean is in target again, but it looks like right now the United States hopefully is going to become okay as the models have the storms moving off to the north and a little bit to the east. Although I did watch Irma, the models moved every single morning from a direct hit to the east coast of Florida, moving all the way to just south and west of Key West and moving up the Keys and the west side of Florida. So as good as the modeling is, it still is subject to change, at the very last minute. So we're watching it carefully.
Hey, Jeff, I have a somewhat controversial, if not provocative idea. We were talking to Barry Sternlicht last week. I don't know if you had a chance to watch the show, but we were talking about people who build and will rebuild in some of these affected areas, perhaps less Texas, but maybe more Florida. And he lives down there, has a home down there. And we were talking about who should pay for all of this, whether the government should pay, FEMA, all of this. And he said, look, there are certain areas in the country that have a preponderance or more likely to be affected. Maybe if you're going to live there, you should know these things. It was a very unpopular thing to say. I should say we got a lot of commentary from our audience about this. But I'm curious from your perspective, given that you do watch which areas are more likely to be impacted by weather events, how you think about that issue.
So it's an interesting public policy issue, and I'll give you my personal view on it. And I actually do have a house in the Florida Keys, and thankfully I still have a house in the Florida Keys. Mm-hmm. But my view is that if we break the pricing signal that insurance provides for the amount of risk that we're really having people, building and developing in areas that is uneconomic, and that we really ought to allow the actual signal, which is the price, what that risk that they're actually bearing. And I think the people that live there should bear that risk. Now, obviously, it's quite easy when you've got a lot of rich people living on the coast. That's a lot different. When you're sort of up and down the Keys, and there are a lot of people that can't afford that. I think the government probably needs to step in and make sure that there's a way that those people can insure themselves. But I think one of the reasons we've got a lot of overbuilding and overpopulation on coast, and the United States is in a much more risky position today than it was before, is that, frankly, the cost of insurance, the flood insurance, is inadequately priced and is not sending the right message to the marketplace.
So what would we have to do to change that?
So I think from an insurance perspective, and I will tread cautiously here because I deal with 50 regulators in 50 states, and by and large they do good work. They have to be willing to allow insurance companies to charge what the risk is, and that the free market will ultimately figure that out. And if I don't do as well as one of my competitors in charging that risk, that will be on me, certainly not on the customer. I think from a FEMA perspective, on the flood perspective, that will be a tough thing to go through Congress, because you're really going to have to actuarially allow those rates to rise and rise significantly to the point where they can actually afford to insure the properties that they insure.
But here's the
Hey there. thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.